Let's start with the concepts to identify liquidity. So, quick reminder to make it pretty easy for you, we try to identify the points in the market where the majority of the traders are losing their position, aka the stop loss, or big institutions are at that particular point in time in a huge drawdown, and this is what we want to target or what we try to identify using these concepts. So I'm going to start with a very basic form of liquidity, and this is specifically when price is creating a BOS and then you expect price to move all the way back down because at that time you cleared out all the people who thought that price will at this high will reject. Okay, so let me just make it probably a little bit bigger so it is more easy for you to follow. So you see this classic higher and higher low thing, right? So you got the BOS here, you created here a high, and in the mind of a normal retail trader, or in the mind of an SMC trader, or in the mind of almost all traders, okay, because everybody's using all form of strategies, they think at this point here price needs or has a chance to go down. Okay, so you got the breakout traders who think that once price here got broken, it will go up. You got support resistance traders who think price will go down from here. You got SMC traders who think that you have here a valid POI to go short from. And this is like the first reason why this point here, or this high, okay, this here where I draw right now, liquidity, is exactly the reason why price will give you this pullback here afterwards, this move down. Okay, that doesn't look, I know it doesn't look like this is liquidity or anything like that, but yes, it is liquidity because at this point many people lost their position. Okay, the breakout traders are losing it as well because it's moving then to hunt their stop loss. So just by targeting this market and then waiting for the reaction, the institutions got their profit that they wanted to see. So this is right now here, this example, show you the other one in a downtrend. So price is breaking structure to the downside, and here same thing. This is a liquidity hunt because you expect price to continue to go down lower, but in fact it would just start to give you this movement. Now if it will now from here continue to go down, or if it will really reverse all the way to the upside, this is a different story. This is something which we don't know by just looking at liquidity. We will know that by using everything in combination. But this is already the point, okay? It's a point that people do not really think of, and I think everything is always hidden in the detail of every single concept that almost everybody is using, okay? So we understand once a low got taken out or a high got taken out, it's always a form of liquidity, okay? So nothing special till now. Let's continue with the next one. The next one will be something more popular, so I know that this is what the majority knows, and it is called the so-called equal highs and the equal lows. Important at this concept to understand is here the idea is almost the same. It's almost the same like we had it here to the left. You expect from retail traders that they think due to it got here this pullback to the downside, price is coming back to it. So this is like kind of the retest. So they entered the market at this point here. So price should now go down. okay? But this is not true, because whenever you got like so many confluences for price to go down, this can get easy victim for price to just hunt it and then go to continue down lower. Or other option, just to show you right now all the options that we have, is price could just absorb this liquidity and could just go up higher before maybe then give you a pullback, going probably even, which is possible, to just go then really go crazy down if this is the case, or it can then from here just continue to go up higher, okay? But just to explain you this, whenever you got equal highs, these are the options. Plus you got one more time option. Let me show you. This is probably what, again, many people would not think of, but you see price creating you equal highs, and then look at this, it will just go down. Okay, this is also true, and this is the interesting thing of it. So you can just see you have a lot of variations right now when it comes to just basic equal highs and equal lows. So let me just sort this a little bit out for you so it's not too confusing. But for you, important to understand is whenever something seems to be a concept that everybody's using, right? Like the equal highs, everybody always think of, yeah, we want to see these highs getting taken out, and then we want this typical reaction. This is exactly what everybody thinks of when it comes to equal highs. But if you go on the charts and you would just start backtesting that, you will see all these scenarios that I show you. Okay, this is why I'm sharing with you all these scenarios, because they do exist. Okay, and it is important for us to know that they do exist. Now, for me, this the last one right now that I mentioned to you, that price will then like will go down, or will it continue to go up higher? This is right now not really relevant, okay, because it will be then just a new context. But important for us is just to know that you have the option for this first scenario where price will really go hunt it and then will go lower, or the other one that price will hunt the liquidity and it will just go even crazier higher before then maybe go down even lower like this. Or from here, like I said, it could just start with the next bullish movement, okay, to go and hunt here this next liquidity, or the next, or to make the next break of structure, however you want to call it in this specific situation. So you can see this can happen, this can happen. So you have liquidity, but as you can see, this liquidity will not get taken out. And the same scenarios are vice versa for the lows, or for equal lows. So one option is you see equal lows, so price will go in the hunt of them and will then continue to move crazy down. Or you got your equal lows and price will then absorb it and will go crazy up higher before then giving you a pullback or going crazy down. Or like I said, price will just respect it, will just go up higher. Okay, so super easy concepts, super effective once you know and what kind of particular situation you are. Okay, so it's all about recognizing a lot of situations in the market and then using the right pattern for the right situation. That's basically it. Okay, one last word to equal highs and equal lows. So if you have your equal highs, what I want to see is really price making equal highs. So that means the first high here should be higher than the second one. This is for me equal high. If this is higher than the other one, then this is already the first form of liquidity. So it took this out and then price went down lower. Okay, so this is the difference right now between this form of liquidity and this form of liquidity, because here the high is lower than this. Here the next one is higher than the one below. or the first one. Okay, this is super important to understand. This is how you can recognize which scenario you are currently. Okay, because this right now here is just an easy example on how it can look like, but in practice it will look very often a little bit different. Okay, so I can show you, like, for instance, another example on how this could look like. So for instance, you got push up, push down, price is moving up higher like this, and then it's already moving down. And for instance, this was already a form of liquidity that was available here, and that was the reason why price then from here started this move up to 100 and then to move it down. Okay, so you would have had here in this case two potential trade ideas, or you even expect price to go down lower, so you would have been potentially even understanding that you have a POI here and a POI there, so you had like two crazy entries for this particular situation. But like I said, I will go over all these things in the next kind of chapters. Here we will just deal about basic concepts of liquidity that you should know, you should be aware of them. Okay, let's move on with another one. This is also one that I've seen very often. It is basically price is ranging. Okay, so you got a ranging market, and then what price likes to do is to hunt one of the sides and then move on the other direction. So you have like liquidity here, and you got liquidity there. Because you got kind of the same principle. So you got equal highs and equal lows, but it can be triple lows, it can be triple highs, there can be 4 highs, 5 highs. Okay, even if like this one swept the previous one, okay, but they're almost at the same level, you know, that means still there is liquidity. Because what you need to think of is that somebody is selling, putting stop loss above like this. So what the institution needs to do is to go and hunt the stop loss, which is doing with this movement, and then he will be able to bring price then all the way back down, because what he wants to do is to take out his stop loss, so he can take out this money and put it in his pocket at that particular moment. Okay, so this is a ranging market. Of course, also this scenario can look a little bit different. So we can have a scenario where it looks something like this, where the low will get taken out and then it will take out the high, for instance. Okay, so it's not always relevant that the price will need to hunt both sides of it. Okay, sometimes it would just hunt one side, sometimes both sides. This will again depend on the purpose of that one specific institution, what he wants to do today, because the whole price chart looks in the has a different context, different informations. So let me just show you, like, it's possible that price is ranging like this, and then it's hunting one side and it's just moving in that one particular direction. Even if we have liquidity above or down below, it doesn't make any big of a change, because that's how it can occur. So that one scenario, and the last one, just the opposite of this one. Price would just move in this one direction. I think the concept should be now super clean, because what I just mapped out and these few examples are basically all forms of liquidity that we have in the market. Okay? Just think of every high, but look at this. Also here, this low is also a form of liquidity. So let me just make a more complex concept, okay? But you can hear right now from the name, it's not a pattern. So what I just draw you here, these are not patterns, these are concepts. So that means you need to know how to apply them. So for instance, price is moving up like this, doing this, doing this, doing this, doing this. What did just happen on this specific scenario? Well, first of all, price did took out liquidity here. It did took out liquidity there. It did took out liquidity here. It did took out liquidity here. It did took out liquidity here. And now, if I need, like, for instance, many traders would say, yeah, this is like a break of structure, right? It looks like all the breaks. But what you can see here pretty clean is that price, if we need to map our structure the way and how we should do, this is the structure, right? So this is how price is moving. You have this and you have this, right? So every high, every low can always be victim to something. So even this here can be future liquidity. And trust me, it will be. So all highs and all lows are, to sum it up, are just form of liquidity. The only thing that doesn't make it liquidity is one simple aspect. That's timing. Okay, the timing will always make the difference if a high or a low is liquidity or not. For this internal high, or what it is, it was the time specifically after price that took out this low to say, you know what, here it's still, we generated, we move down to take out this, and now we want to take it out to create this. And he says, no, we will protect this high because it's not the right timing yet. We want first to go down, and now it is time to hunt also this one, because we have here our next big source of liquidity where price wants to go in terms of price, timing. And then we say, hey, then this one will be liquidity and price will go down to 100. And then at some point, moving even down, then this is the one that we want to hunt. Then it's this one that we want to hunt. Then we move down for correction. Then we want to hunt this one, and so on. Okay, so you can see this liquidity can be super crazy sometimes, because the only aspect what doesn't make a high or a low to be liquidity is at the end just timing. It is simply just timing. Now we can use all these concepts, equal lows here, equal highs, like we have it here, or triple highs, triple lows, or let's call it better, this range market here. We can just understand, okay, we have a chance, price will hunt the high. Then we need to, of course, look to the left, look what you have here, look what you have there, look the overall situation. Are we currently super bearish, and is this right now just a correctional phase? Price just wants to make the pullback to trap people in order to continue to go down lower, for instance. Or are we already here, in this case, are we already trending that much down that it's enough that we just continue go down lower because the pressure is already so big in the market? And these are things that we will learn in the future chapters, and of course on how to apply it on individual setups. But just for you that you understand, hey, it is not always the same. It's not always a pattern that we need to follow. It is the intuition that we need to build up by understanding all the possibilities and by understanding on how the market wants to target specific points in the market, or where you need to understand one more time. You need to understand, like I said, the market is really moving from big liquidity points to big liquidity points, because if you understand that the biggest institutions, they do not really care about all us retail traders. They simply just do not care about what we do here, right? So they just generate these strong bearish trends here. And while these trends got created, there are other institutions who try to follow something similar, right? But they just don't have that much cash. So what they do is they need to place up their money somewhere on this way. So they're moving like this from liquidity to liquidity. And for them, that's easy the goal to make it. Then you have even smaller institutions who doesn't have that much cash, so they need to place more trades until they get where they want to get. Okay, so you can see already what the intention of a market really is, because it is just here to collect on the way of the target, okay, as much as possible liquidity. Okay, so now if we understand this, boom, 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 he will just go collecting liquidity after liquidity. That's what they want to do. They just want to go, okay, they use the smaller liquidity, available liquidity in the market to come to a bigger target. That's all they do in reality, guys. It is, at the end, I would say that simple, but it is not that simple as it sounds right now, okay? But just understand, this is the flow of the market. This is how the market works at the end, okay? And all these other concepts that we are going to learn in this course, they are here to provide you additional help in determining where are these targets, because defining these targets is not always easy, okay? But as soon as you got a feeling for it, you will see it will make so much sense. This is why a master will not be born overnight. It needs time in order to develop that one skill. And here, like I said, super important is everybody knows these concepts, everybody knows these scenarios, but the most important thing is to view it with a different view so you can see what the others don't see. Because what everybody wants to see, super psychological here, they all want to see this scenario. Everybody. Trust me, when I started with SMC, this is what I wanted to see the whole time. But then I started to realize it's not always like that. I've seen this scenario. I've seen this scenario. Now, when is that one occurring, when the other one? You will find it out throughout the course. Also here, simple break of structure is at the end some form of liquidity, as we can see. Because why is the price making this pullback? Now, I know in this case, this is an extreme example, but like I already explained to you, we also have this example that this high is just getting taken out, and then afterwards it's even taking out a low. Okay, that means here we got a clean liquidity sweep, okay, of it, and there is no difference to this one. In this case, the sweep occurred here. Price still continued to move another 20 to 30 pips, but then it reversed, okay? Because it tried, to collect even more. It tried to bring more people into making it believe that, yeah, everything is bullish, right? This is another form of liquidity. And then it's just dropping, okay? So, yeah, probably I forgot right now, but one of the concepts, it is trend line, okay? It is trend line liquidity. Just forgot right now to mention trend line liquidity. So let me just go down and just draw additional concepts, because there are just so many of them. In this case, this is also trend line liquidity already at this point, okay? Equal highs, equal lows are also trend line liquidity, okay? So it's just crazy how everything is almost the same. And this is just to make this clean, this is actually the advantage that we have. That everything, you know, just makes so much sense, because you need to understand that at that time where all the concepts will tell you one simple thing, this is exactly what will then happen at the end, you know, if you of course apply everything the right way. So one more time, we got the scenario: price is moving up, moving down, sweeping up a high, and then sweeping down a low. This is for sure a form of taking liquidity here, which is the same as a normal BOS on the higher time frame, but also of course on a lower time frame. You just need to realize that. Super important. Okay, this is one side, and this is the other side. Okay, so this is not an equal high, not an equal low. That's actually exactly the opposite of it, because it's doing what it's doing. Now, what does that mean right now? Just for us to make a further context, super important. What can price now do in a situation like this? From here, it can easily take out the low. That's what's possible. But, and then to continue higher. But it's also possible from here, price to make pullback and then going down lower. Keep that in mind. Okay, also here, the same like we just discussed on the other concepts. You have multiple options. I'm just going to draw here all these options. So three options that we have. So from here, like I said, the most basic idea is it will go down lower. That's what the majority was expecting. Then price will take out the high, and here it will take out the high, and then we'll go, for instance, down lower. It's an option. So here the same, it's sweeping out the low. We want to see price going up higher, or we want to see price taking out that particular low. Same here. We expect price to potentially just do one of these previous options and then continue to just move on in one of these particular directions. So like here this, and then just continue to go crazy, or of course to just go one more time to the upside. So I would just say the last two options are not that relevant for us, because this is again further context, so I would not really focus too much on these. These are the two options that we have in reality, and that's that you should focus on. And now I would just bring you in the context the trend on liquidity. Trend on liquidity is basically price is just moving, right? It's just moving like this, and people think it will go up forever. So this is trend line liquidity. Now, I'm not saying a trend line is not working or something. You also have at the top also your trend line liquidity, but more than likely, if this is right now a bullish market, okay, trend line, it's trending up, so you got here your BOSs, then more than likely what will happen at some point, price will go take out the trend line liquidity and then will move up higher. Or what it can also do is he will just go crazy down. So we'll go like this, and then it's just reversing here the whole market, and it's continued down. This is another form of the trendline liquidity, okay, and vice versa, okay, for bullish and bearish, the same kind of thing, okay. But also here, keep in mind, it's not always the same, okay. Also here, if you got like here your break, it doesn't mean that price will go down forever, of course not, because this could be just a liquidity grab in order then to move up higher. But also here, even if it worked out, you can see it will not always work out. It needs the right context for everything, and this is what is more important. But here you have your concepts, you know the options, and this is relevant. And now let me just show you on how all these concepts do also come together. This is pretty interesting. So for instance, now we got market, the classic bullish market, right? So price will go up. So show you like this, but I will, so this is what you should now keep in your mind. I would just draw right now based off that. I would draw the lower time frame. So move up, we create a high, price is moving down, and then price is starting to make this. Okay, so you can see it already. This means right now price is above a high, which means liquidity. At some point, we know it will go down. What we also know is, look at this, you got trendline liquidity here, which means price can now just go and hunt this, right? This is one option, for instance. This is if price will be in a context where it is, for instance, this whole market is bearish, okay? And this is just a correction right now. This is how everybody see. And this is then again your trend line liquidity at that point as well. Okay, so you can see it's crazy how everything will come here together. So you got this correctional pullback after price is moving aggressively down, will give you the pullback. Then you can see you are above and high, which means, hey, you are in a liquidity area. Then price is building up on a lower time frame this trendline liquidity in addition, which is in general the trendline liquidity. And then at some point here, boom, it will start to reverse and it will go down. And in this example, you have multiple sources of liquidity combined in just one, okay? And this is super important for you to understand. Now, what if, let me show you, what if price is, again, same thing, building up your trend on liquidity here, going up higher. Now, it's hunting your trend on liquidity, and then it's just aggressively moving up. So you got here a trend on liquidity. It doesn't need to, like, just to show you that, it doesn't need to hunt all lows, right? So it doesn't need to come right now like below this or something. It could, of course, but very often it would just go hunt a little bit and then it will continue up higher. This means this market here, of course, they took out here the liquidity. You're in above, you have trend line, it's taking out the trend line liquidity out, moving up higher. This one is not in the same context like this, which is bearish. This one is in an overall bullish context. That means it will just respect the trend, because also here, like the previous movements, have been something like this potentially, okay? And then you know, okay, break of structure, blah blah blah, everything is bullish, price needs to go anyway back up higher, okay, for instance, okay? So that's right now a trend line combined with the other ones, same kind of thing. What you see here, these are also equal lows, okay? Equal lows are also part of this trend line liquidity, okay? So you can see it's a lot of things. And we will speak also in the future about more kind of concepts that we can use, because it is always, you know, you have so many options, but I think with these concepts right now that we just deliver right now, you can really understand every single movement in the market, because it's it happens due to one of these concepts or one of these options. Okay, with that being said, guys, wish you a lot of fun with drawing this patterns, trying to find them on the charts. We will go then in the next video into the practice.